I think there's a lot of fear when it comes to understanding your finances. And, you don't have to be a wizard. You just have to look at the data. And the data is going to tell you what's going on, right? Look at your bank account, know what's coming in, know what's going out, and, keep on top of that. And once you get into a habit of looking at it more regularly, then fear will go away because you'll know what to expect.
Hello, my real estate investor listeners, and welcome to another episode of the Freedom Blueprint. Today, I have with me my friend, real estate investor, and fractional CFO, Cheryl Heller. Cheryl, thank you so much for joining me today.
Adrienne, I'm so excited to be here and talk to you about all things real estate investing.
I know that Cheryl's going to share so much experience and so much wisdom from you since she both works with investors and then also is an investor herself. So please make sure if you get value out of this to like the video, subscribe wherever you're listening, YouTube, Spotify, Apple Podcasts, and then write what's helpful down below. Or if you've got a question for Cheryl or for me, pop that in the comments too. We will be monitoring that and get you an answer. So for those of you tuning in, I know Cheryl through Women's Mastermind, Go Abundance Women. Cheryl joined a while back and we had some calls about real estate investing, specifically like short-term rentals and midterm rentals. And I really got to know her well through those calls. And Cheryl's just a wealth of information about real estate investing and about specifically the financial aspect. So I'm excited for her to share her story and some of her wisdom with us today. So Cheryl, I'd love for you to tell our listeners kind of your background and how you got to where you are today.
By education, I have an accounting degree and I went into public accounting, as all good accountants do, and eventually left there and went into a corporate environment and spent about 20 years doing finance, operations, culture building, transformational project management, all kinds of fun stuff. And, tried to do some real estate investing on the side, and it wasn't really working out the way that I wanted it to. And so when I left my corporate job about 7 years ago, I kind of took a break from that and really kind of dove into real estate investing. I actually got my real estate license, which I don't really use, but it was just, I think, a good process to go through, and really kind of leveled up in that area. And alongside of that, I found that friends and former colleagues were kind of calling me from the finance perspective saying, hey, doing this new thing, I have this startup, can you come help? So alongside the real estate investing, what I've been doing for the past 7 years is providing fractional CFO and strategic advisory services to startups and small businesses. So I really love working with founders and understanding what their goals are and helping them put together a plan to get there.
You make it sound so easy, and yet I know that there's so much that went into all of what you did there. And so I'd love to maybe have us dive into it a little bit. I just learned, Cheryl, what I'd like to explore is, you had some real estate investing endeavors or attempts that didn't work. And I love that you shared that because so often people gloss over that. And the truth is we earned our stripes. And then I'd love to hear kind of what changed, maybe what you realize in hindsight, why those first ones weren't working, and then what changed and made you so that you're now successful in real estate investing. What's the difference there?
I think a couple of original investments that I did, I was really listening to other people. I had a friend who was a real estate agent locally and was like, hey, I'm selling this condo. It would be a really good rental. And sure, like it was rented. We never had really vacancy for longer than a month or so. But ultimately, it was just break even. We weren't actually making any money off of it. And so after a couple of years, we went to sell it and it was fine. Like we kind of broke even. We didn't lose money. We didn't make money, but that's not really why people get into real estate investing, right? And similar happened to another property that, we got into, and we, like, some years we made money, some years we didn't. And when I did all the returns, for the time that we owned it, we kind of did even with the stock market. And it was a lot more work for us than just investing in the stock market. And I think the thing that changed was when I really dug in and started learning how to do my own underwriting and how to kind of think of the investment more as a business instead of just, hey, we're going to buy this house and we're going to rent it and maybe it'll go up in value and we'll see what happens. But using all the resources out there, knowing what to do and who to trust and rely on, and also knowing that like we needed to know what we were doing. We couldn't just rely on what everybody else was telling us. And so I think that's really the big shift that we've had. And we still have experts that we work with that, whether it's our property managers, our real estate agents, we do heavily rely on that, but it's also this sort of trust but verify. Like, we do our own research, we do our own underwriting, we are not afraid to tell them, no, this isn't going to work for us.
That is so huge. And I feel like so many people leave real estate investing because they don't get it, right? They want to just press the easy button, be like, well, my real estate agent said it'll make this, and the property manager agreed. And so I don't need to run any of the numbers and I'm going to be fine, right? And then they don't keep their accounting up to date. And so they don't even know whether or not they're profitable until like they catch it all up for tax season. And then sometimes there's a surprise, right? So I love, love, love that you shared that, Cheryl. That's very, very helpful. So now that you are doing the underwriting, you're running the numbers on deals yourselves, what do your deals look like? Where are you investing? What kind of strategies? What does a great deal for Cheryl look like today?
So we do mostly short-term and midterm rentals and vacation market. So drive to vacation market. So we invest in the Outer Banks in North Carolina and in Charleston, downtown on the peninsula, Charleston, South Carolina. And both places are, the Outer Banks, like that is built on short-term rentals before short-term rentals were really a thing, right? So, and I know there's other places around the country that are similar. That just so happens to be like we went there for vacation and we're like, oh, we really like this place, so let's kind of do more research and get into it. And so we have property managers, we have, properties that we know make a good amount of money and we enjoy going there. And so it's not sort of a chore to go there and check on the houses. It's actually, a nice thing to do. And, the thing there, like we would completely keep buying more, but in the last couple of years, the prices in both of those places have gotten way out of whack and they're just not cash flowing anymore. So we were lucky enough to get in before the prices went up when interest rates were super low and our revenue has gone up, which is great because now we're doing even better than our original underwriting. And then about a year ago, we got into the midterm rental market. And so we bought a house just north of Atlanta. So we seem to be following my daughter around. So she went to school in Charleston. So we bought a house in Charleston. She moved to Atlanta after college. And so we bought a house in Atlanta. And that one is much more sort of midterm rental. It's in a neighborhood. It's in, a very sort of serene, kind of quiet, family-oriented neighborhood. And that one has been great for people who either are displaced from their house because they need a major repair or renovation or are moving into the area, but their permanent place isn't quite ready yet. And so we've had people stay like 5 weeks all the way up to 3 or 4 months. So that one, it's a little bit different than the short-term rentals. And we are managing it ourselves because there's just not as much kind of turnover and activity, which is nice. So I've got a mix of both. And we do some syndications. We've invested in, 2 build syndications. So building or remodeling. One is a apartment building / retail on the first floor here in DC. And then another one is a cul-de-sac of multiple single family home beach houses in Carolina Beach, North Carolina. And then we have some apartment building syndications too. The syndications haven't done as well as our own individual investing. I still think most of them have good, solid fundamentals, but they've just taken longer, particularly in the construction aspect, longer to get through the process than what was originally thought.
And everything you're saying just tracks with my experience as well, right? Like I always figure you're going to either have like risk, reward, and work kind of all correlate often, right? And if you're not doing the work of a syndication, you're probably going to get a little less reward, right? There's very few things that are as rewarding financially as owning your own investment property, like 100%.
That is such a true realization, which I came to about maybe 2 years ago when we did have a third or another partnership that we were in that we spent maybe a year trying to get out of it. And we had like some of the syndications weren't going as well. And I said, listen, like, we're not doing this anymore. Like, we've been in these syndications for a couple of years now, and now we will invest on our own, which I know sounds like, I know maybe if we did it with a partnership or a bigger group, we could, go further faster. But that just hasn't been my experience with respect to the investing. When we do it ourselves, it works out really well. When we join another group, it doesn't work out as well.
And if you do enough partnerships or joint ventures, you're going to have one that goes south. And I have. And it's like the amount of time and energy that's been spent cleaning up that mess. It's just, and the money that's tied up and that can't be working for us while it all gets figured out is negative. Now, partnerships can be great. I just think that people often don't realize how to make it great, how to protect themselves, and what to do if it doesn't go right. So thank you for sharing that, your experience, to give people that awareness and so they can be prepared.
Now, syndications, it's a little bit different because they're usually entities that are doing the work, but the partnership that we were in, the main partner who kind of brought it to us and who was managing it on the ground, like if we had done some background research, we probably would have found out things that we should have known before we got into it versus finding them out afterwards.
Yeah.
And so I think it's like you have to do just as much your own underwriting and you have to actually vet the people you're investing with.
Yeah, I agree. And having them in your network or knowing them from other sources helps, I have found, versus just somebody that approaches you about a syndication.
Absolutely.
So, Cheryl, you are I think our first guest who is really in the midterm rental space. I love that you're self-managing that because I think that there's a ton of potential there. And I'd love for you to share with somebody who's thinking about a midterm rental space, or maybe they're in the space and they haven't seen success yet. What are maybe just a few of your tips or strategies that have helped you do well with that midterm rental in Atlanta?
I think one of the most important things, so we're not local. My daughter's local, but she also works full time, so she can't run over there all the time. But we have found a cleaner and a handyman who are so fabulous. They've helped us through, little issues and big issues, and they're, always willing to go to the house and check on something for us. That's huge. And then also having the right sort of tools in place and technology tools, right? Like making sure that you can see, we have Ring cameras on the outside of the house so we can see what's going on the outside. We have locks that are like auto locks that we can see on an app, like who's using the lock, who's getting in and out. So all of those things, having the right technology in place so that if you're not there full time, if you need sort of some help in managing what's going on at the house, you have all of that in order.
I love it. I did not tell Cheryl to say these things, people. I think Cheryl knows how much I love technology, and I agree 100%. As a long distance property owner, technology really could fill that gap so well. Thank you for sharing that and emphasizing those key points. Now, can you share a time with any of your investments? And I know you've touched on a little bit with the partnerships, but maybe there's a fun or crazy story about a share time when something didn't go as planned and what lessons you learned or how you handled it. That there might be some wisdom for our listeners in that.
There have been a few. So this partnership that I mentioned earlier that I got into through a contact that I had met through one of my local real estate networking groups. And she knew the main GP through one of her real estate masterminds. So it was sort of like a friend of a friend situation. And she was investing with him along with a few other people that I knew. And so we went in, it was a marina. So we were like, oh, this is really cool. When we do our investing, it's myself and my husband and another couple. So the four of us do it together. And the other couple is very into boating, and so they really lit up when we told them about this opportunity for a marina. And so we got into this partnership and, we looked at the underwriting, we did some research on what it takes to run a marina, and, everything seemed to be making sense. And then about a year into it, we were having trouble sort of getting a straight answer from the main partner who is kind of the boots on the ground. And, my response was kind of like, hey, he's probably just a little disorganized. Like he's got a lot going on and this and that. And luckily I was, because of my finance background, I was actually doing the books for the partnership. And so I could kind of see what was coming in and out of the bank account. And I had access to all of the systems that, whether it was the marina management system or there was a short-term rental house on the property as well. So we had, all the Airbnb and HostAway and all of those systems that used to manage short-term rental. So I could see all of that data. So that gave me a bit of comfort.
Are you planning a real estate event, mastermind, or podcast and want a speaker who delivers real, actionable strategies? I teach investors how to run their portfolios like a business without the chaos. Book me for your next event at adriennegreen.com/speaking And that link is in the show notes as well.
And then down the road, there were all these little flags that kept coming up. Like we paid to have some work done outside to put a new patio and sidewalk and things of that nature. And I couldn't get the receipt. It was a lot of money. I couldn't get the receipt from him. And so finally, when I actually got in touch with the contractor that did the work, it turns out that the partnership that we were in, was being charged for work on one of his other property because he just had our entity pay the whole bill that he got from the contractor. And so I went back and forth with the contractor and I was like, listen, like I need this itemized because I need to get reconciled in our account what is going on. There kept being little things like that. And so the rest of the partners, there were about 6 of us plus this main partner, we started talking on the side about how we really just wanted out. And so we found a real estate agent and we got him to agree to list the property, figuring that, in order to get out of this, we just need to sell the property. And then ultimately in the sales process, he came back to us and he said, hey, I have somebody that'll buy you out. And so we ended up negotiating a way out of that deal. And so we got our money back that we invested. We didn't make any money over the 2 to 3 year period that we were in there. And we spent a little bit of money on our own attorney because we wanted our attorney to write the contract for us to dissolve our relationship with the main partnership. Well, ultimately, after many arguments and long Zoom calls, we felt like it was a good result getting all of our money back from him. So we're still waiting on our K1s from 2024. So once we have those, we'll be completely done.
Thank you so much again for sharing that, Cheryl. I think there's a lot of lessons there for people that, if you are in this partnership and things aren't going well, figuring out if you can sell the property, that's often the solution to let everybody part ways. That's often great. It's nice that you could get bought out instead and not have to go to the market, and the power of using your own attorney and not trusting those other documents. All of that is great, great wisdom for people.
If we had Googled him before we got into the partnership, we wouldn't, because in the process of being involved there, several of the partners were also in other deals with him at the same time. So, they had a lot of, and they were not getting their money back. They, were having trouble selling those other properties. And so I feel like we were very lucky to only get into this one deal with
Yeah.
him.
I have also learned the hard way to do one deal to completion with somebody before we do any more deals with them.
That's huge. Yeah.
Because
Yeah.
otherwise you'd be like the other partners in the situation, and that's even worse. Now, you obviously have had a lot of different experiences. You've learned a lot of lessons. I am wondering, what mistakes do you see new investors commonly make, where maybe you would share some wisdom that could help them not make them, maybe?
Running your investing like a business is super important, right? Like we, in our investment group, we sit down every year and we say, what are our goals for the year? What do we want to do? Like, do we want to buy more properties? Do we want to reinvest in our existing properties? And then we also have kind of operating conversations, right? Like with our beach properties, they're primarily vacant for, late fall and early spring. And so if there are any big, things that we need to do, like replace the deck or replace some, last year we had to replace the sliding glass doors on the ocean front because they don't last very long. So we always have a plan for our capital improvements, and we sort of measure that throughout the year to see, make sure we have enough cash to support those things and make sure that we're prioritizing the health and safety of our guests. And then lastly, looking at the financials, right? We run financials every month. We know exactly how much we're spending on each of our properties. We know exactly how much we're bringing in. And like I mentioned earlier, we have property managers for all of our short-term rentals. And so I look at the statements from them every single month. And if there's something on there that doesn't make sense, like, they charge certain expenses to us, right? And so I'll always question that. Most of the time they have a great explanation. Every once in a while, they're like, oh yeah, like that shouldn't have been charged to you. Or,
Right.
so, and a few $100s here and there, if you don't catch those things, it catches up to you. So, it's really kind of running it like you would run a business.
And that is what a lot of people need help with. So I would love if we could to kind of dive into some of what you just shared and make it super simple for somebody who doesn't have the background or the experience that we do. So first, if you're going to, let's say, look at your reports every month, are you pulling that from QuickBooks, or what kind of program are you using to have your accounting and get your numbers?
The way it's set up, it's pretty intuitive for folks, even if you don't have, an accounting background. You connect your bank account and it will automatically pull in your charges and it will, code some of them for you. It'll learn from how you're coding them and sort of code them in the future. So all you have to do is say, yep, that's correct, that's correct, that's correct, and go through it. And then we use the classes function in QuickBooks. So you can't use that with the basic subscription. You have to have I think it's the second tier subscription. And so we set up each of our properties as a different class so that we can not only see the whole of the properties, but then also we can see each individual property and what's going right and what we need to look at with all of them. We also have a separate bank account that we use for our real estate. So we don't commingle the funds with our personal account. And that way we know, as we're planning. So again, with the beach rentals, right? There's a few months where you make so much money from them, right? And you think you have all this money, but then what you have to make sure is that you're prepared to pay your mortgage through the winter months where some
Mhm.
months you get no income from them. And so having a separate bank account really allows us to create that buffer for ourselves so that we're not mixing it in with our personal account. And then all of a sudden we're like, well, we have this mortgage we have to pay. Where's the money coming from? So I think that's super important tip as well.
Those are fabulous. And I use QuickBooks the same way that Cheryl does. I use every property is a different class. And if you guys want to learn more about that, go back a few episodes on the podcast. Episode number 22 that we posted in February is my review of QuickBooks. And I walk through exactly how I use it and how other real estate investors could use it. So we dig into what Cheryl's sharing there a little bit. So go check out episode 22 if you want to know more about using QuickBooks. But here it is from the finance person herself sharing how she does it. So love all of that. I know it was a really specific question. You are such a finance guru. I'd love to kind of just give you the floor here. Is there more, finance wisdom you would share to, I guess, address the most common mistakes you see real estate investors making? And it may be something psychologically, a psychological, block they have regarding finance, or maybe something really, concrete and operational. But what wisdom would you give on that finance front?
Yeah, so I would say I have one on each of those. So from a mental block perspective, I think there's a lot of fear when it comes to understanding your finances. And, you don't have to be a wizard. You just have to look at the data. And the data is going to tell you what's going on, right? Look at your bank account, know what's coming in, know what's going out, and, keep on top of that. And once you get into a habit of looking at it more regularly, then fear will go away because you'll know what to expect and you can kind of predict in your head before you look at the bank account what you think your month will look like. And so there should be no judgment here. It's really just like, let's use the data and let's be really clinical about it and use that to make our decision. And then on the other front, I would say that from a tactical perspective, there's a couple of different things that you have to be thinking about for your rental properties. So the first is you're going to have one sort of system or one set of numbers for your tax return, right? And those numbers are going to include things like depreciation, and you're not going to deduct the principal portion of your mortgage payment. And so your tax return might say that you made or lost a certain amount of money, but then you have to go over to your underwriting and look at your cash flow, right? And look
Mhm.
at, how much actually came in and how much actually went out, because they're going to be different numbers if you have the cash basis P&L versus your tax return.
Mhm.
And so it's really important to keep in mind that they're not one and the same, and that you do need to keep your records separate so that you can understand that there's the same basis for both of them, right? But there's a couple of different entries in each of them that you want to make sure that you understand and are keeping track of, because, you don't ever want to be in a situation where you're running out of cash because you've forgotten to plan for paying the principal portion of your mortgage.
Mhm.
That's really important. And you also don't want to be super upset if you look at your tax return and it tells you made less money than you think you really made, because you have the depreciation there, which is a non-cash expense, which is the IRS's way of saying, we know you're going to have to make improvements in capital expenditures in the future, so we're going to let you deduct, your depreciation here. It's sort of like a way of helping you save for those expenses almost. And so I think just keeping those two like ways of looking at your income and expenses separate and distinct is really helpful.
Fabulous point, and I love how well you explained it. So thank you, Cheryl. You've given us so much wisdom. I'd love to wrap up with our closing quick fire questions. We'll walk through these three. So first, what is a transformational system that you've implemented in your business?
So I think part of it is those meetings that I told you that we do regularly with our investing partners. So really having that process in place where we know what our goals are, we're aligned on our goals, and then there's four of us, so we're each aligned on what our specific role is so that we can go and do the things we need to do and we don't sort of trip over each other in the process.
Love that. The system of meetings, it helps. And then second, what is your go-to tool for managing operations?
It's pretty simple, but I love Excel. Like, I think that it's just easy to manipulate and you can do a whole lot with it. And QuickBooks is important, of course, but I often will download everything from QuickBooks, put it in Excel so that I can do some calculations and figuring and create those sort of longer term projections or just, have all of those activities and plans kind of all in one place.
Love it. And then finally, what is a book that has been transformational in your investing journey?
So I think one of the books that I read actually a long time ago that was really informative was The 4 Hour Workweek from Tim Ferriss. And I love that because it sort of shifted my mindset from working a 9 to 5 to there are other ways that you can make money and other ways that you can get income that you can do either while you're working your 9 to 5 W-2 or in place of that. I grew up in a 9 to 5 kind of household, and there wasn't really that much talk about alternative ways to make money. And so that book really was like a light bulb moment for me.
Love it. And if you guys haven't read it, highly, highly recommend it. And thank you again so much, Cheryl. Now, if people would like to reach out or connect with you further, what's the best way for them to do that?
Sure. So I actually have a gift for the listeners, and it is a list of finance terms. So the 30 finance terms that you need to know as you start to kind of dig in and do all of your financial statements for your rental properties.
Nice. Perfect. And we'll have that link in the show notes below. So you can just go there, click it, and go get those 30 terms. Thank you so much for offering that, Cheryl. That's awesome.
Yeah, of course.
Awesome. Well, thank you, listeners, for tuning in for another episode of the Freedom Blueprint. Remember that right now we are dropping 2 a week, one on Monday mornings and one on Thursday mornings. So be sure to come back again in just a few days and get more wisdom to help you with your real estate investing.